Good morning, good afternoon, everyone. My name is Ross, and as always, here on Friday, I am here to give you an update regarding the markets. So today is quite an interesting day because on one hand side, the PCE print is going to come in a couple of hours. As I mentioned on the previous stream, this is a little bit of the backward-looking numbers. We are very much looking forward to actually know the CPI, which is going to be announced next week. The PCE is more going to cover the April data. It's not going to be that much driving, but on the other hand side, few things have changed, and we really would love to cover that today. First of all, we're gonna go through traditional markets, S&P 500. Then I'm gonna provide you my updated outlook on Bitcoin. I realized last time there was a lot of unhappiness related to me telling that the price would go lower, and I still believe that. We're gonna cover some of the great value plays that I'm actually investing from here. And not just the Chinese markets, but also other places. And then, of course, we're going to speak about the best, in my opinion, risk-reward opportunity of the decade, silver, the miners, and everything that is actually related to commodities or the hard assets, where the tech would start parking the money very soon. With all that said, let's go. First of all, let's start with the crypto charts, give you a really quick update. But before we do that, first of all, congrats to all of those who took my recommendation and hedged, taking into account the volatility index or weeks. We are, just for the weeks itself, around 25% in profit. The thing is, with VIX, you normally buy the calls. In that case, you probably doubled your hedge position just in a number of days. That's where I announced weeks first time last Friday, and here I indicated that we are actually jumping out of that level of extreme greediness, because VIX indicates the amount of put to call ratios, and when we are very low, it means that market is extremely bullish. And normally on the extreme sides, of course, market tends to punish the overweight participants, the ones that go very heavy into one direction. Either it's attack or it's defense. You can look at it this way. So with weeks currently providing us a nice bounce, obviously that affected the markets overall. When I'm gonna look at S&P 500 right now, I see that we are closing below a very important level of 525. And what is here important to know, of course, we're still kind of in an uptrend. We might also reverse here, creating this higher low, and then create one more divergent high. But if I zoom out a little bit and I actually look down, I think that's very probable that, as you remember in my video, which was dedicated to the market correction, the inevitable market correction, market always come back to revisit its 200-day moving average. It's never been the time in history. I understand right now we are in a prolonged money printing and currency debasement situation, but of course that thing at some point would backfire, and I think the market would revisit the level of at least 438. So you might question and ask this question to yourself: what's going to happen to my risk on assets? What's going to happen to my crypto? And what's going to happen to my altcoins? I'm not saying it's going to happen right now. I think we can create, as I said, one more divergent higher high, especially taking into account that dollar is still relatively weak. Despite we created this higher high here, we still could not reclaim super important level of 105. So as soon as we are closing here below, I anticipate a little bit more of the downside. So we are still, in this kind of a falling wedge pattern that actually works quite well for the ForEx and for the currencies. And for those who have missed my previous video, please do not forget that DXY, or dollar strength index, by more than 50% is driven by euro. Euro USD pair has been performing quite well. And I might actually consider that we are not selling off here on euro, despite euro provides way worse yields. So it's probably multiple reasons. Market can de-risk prior to the CPI print. If market participants would anticipate that CPI would come hotter than expected, a lot of people would probably like to actually deleverage or de-risk themselves from the American economy. And that's potentially one of the reasons why for this week or for the upcoming week, they prefer to stay in euro or British pound. One more indicator that I like to look at, if you remember, I showed it to you, is Australian dollar versus Japanese yen. That is the best, in my opinion, indication for risk on versus risk off narrative. Here, I would also be quite cautious because it looks like we can't actually go beyond this level of resistance, which is around 104.5. So this is a very common pattern in trading when we are creating this parabolic extension and then we start consolidating, losing this parabolic uptrend, and then we might actually come and take the late longers and kill some of those liquidity zones of the people who actually wanted to join this uptrend a little bit too late. Even if we want to continue higher, we still want to continue without those late longers, and they're quite weak. Their positions are quite vulnerable. Think of this way. So once again, for those who do not remember, Australian dollar indicates risk on, Japanese yen indicates risk off. And of course, there has been a multiple reason why the Japanese yen has been not performing very well. They're quite fundamental based on the Bank of Japan policy. So I'm not saying that this chart exactly is representing the entire future of the crypto and risk on assets. Primarily, some of those moves are fundamental. Japanese yen versus American dollar is also extremely weak. If you guys want to travel to Japan, that's the best time to do that. Honestly, yeah, it's unprecedented prices. If you are traveling from Europe or the US or Australia, like, you would be surprised how Japan is actually cheap due to the weakening Japanese yen. And that's like another dedicated video that we can actually have about what happens with Japan and why their macroeconomic policy absolutely sucks. And I'm quite worried actually that the Japanese market can create the contagion around other countries. But without going too much into detail into the Japanese case right now, everything we need to know is following. Yeah, DXY still gives us a breather. And let's have a look on this Bitcoin chart, because like I saw in the comments, a lot of people were angry with me telling, you know, Bitcoin is going lower. And I understand this is not the message a lot of people would like to receive, especially if they're like over leveraged or highly allocated. And guys, I want to emphasize here once again, I'm not flipping bearish. I'm not saying like, you know, that's we're going down from here down to 20K or 16K. I still say, number one, I expect at least 86 to 88,000 this year for one Bitcoin, which is significantly higher where we are right now, which is 68,000. So that's number one. Number two, I still think that this is not yet the bottom, and the bottom would be at least several $1,000s earlier, which can, looking into the bullish Bitcoin dominance chart, which is roughly between 54-56% right now, that can cause the significantly higher drop with alts. And the reason why it is so, because a lot of alts are in their consolidation range. They created a lot of poor lows. And as you remember from the auction market theory, from the simple understanding of how the market making works, for us to start going up, for someone to buy, you or me, someone needs to sell. Market maker selling to you does not want price to go against him, contrary to his position. So first he wants to kick out all the longs, and then if the price has to go up, it would go up. But due to the fact there is so many wicks, I'm going to show you in a second on the chart, so many poor lows created with those consolidation ranges, I want to see more swipes, more open interest wipe out. So please keep your emotions in that case adjusted, right? When I'm saying that, it doesn't mean I'm wishing bad for crypto, I'm wishing bad for Bitcoin. I'm just simply telling you my views as a macro trader and my views as someone who manages significant amount of money. I'm not in a rush to buy here because I know I can save hundreds of thousands of dollars being smart and opening up my position around the swipes and not at the market price. Now let's have a look on the chart where those swipes are going to happen. For you, and I'm always here to teach and not just to give the ready outcomes, you see that we have been forming the range since 28th of February, end of February until now. I understand it's like a very boring range. It has been a very prolonged consolidation for months and months. 95 days to be precise. You can check yourself with the horizontal measure. So more than 3 months in this range and there is no resolution. But within this range, we've done one thing. Yeah, we created that zone of demand because we actually kind of lost the range and trapped a lot of late shorters here who started to think that now we're gonna like accept in the previous range. And this is exactly how I am always emphasizing, guys, you might believe that pattern trading is doing extremely well for you. Fine, it works sometimes on the larger scale time frames, on a daily, on a monthly, on a weekly. But if you want to trade intraday, you have to understand that's the first and foremost straight road to get wrecked, because market makers are understanding there is a lot of unsophisticated traders in crypto. They would draw head and shoulders, or they would draw diagonal lines, breakout meme lines, and then they would say, okay, I have too long or I have too short. You understand how that's tricky, and that's why I encourage everyone to get a little bit more sophisticated, to get a little bit ahead of the curve. You don't need to be the best, you need to understand how a market maker work, and you need to be slightly better than 80% of the market. That's unfortunately 80-85% of the market is where the people, what are the number of participants who are losing the money. So great thing about trading crypto is that it always provides never-ending source of not sophisticated, no-wise traders. You know, they get notifications from Bybit, Binance. They see the channels like Moon and Crypto. They see the referrals of the, you know, subscription links, and they enter and they are shorting. They are shorting those zones. They are not familiar with more sophisticated ideas like PO3 concept, accumulation, manipulation, and distribution, and so on and so forth. So that was a perfect example of that pattern that can play. Let's draw it once again on the charts. That's exactly how the PO3 can play, and that would be your zone of accumulation, that would be your manipulation, losing the range, and that would be your distribution, taking all those highs. That's why I'm saying the top is not yet in. At least 82,000. Why 82,000? Because if you simply take this range, the macro, the bigger range, you take the fib extension, that's going to be your level of 1618, roughly at around 82,400. I think if you're going to break out of that range, that's a very possible target to achieve. But before we even getting there, I want to emphasize that we are having our smaller range for the last couple of weeks. And you see all those lows. That's why I want that range to be lost. I want everyone to start shorting here, and I want that range to be reclaimed. And that will be my target 1, that will be my target 2, and the target 3 that I mentioned, roughly at around 82,000, if we are able to break out of this range. I'm always emphasizing that trading is a game of probabilities. So everyone who tells you with 100% confidence, I wrote that one comment saying, you don't tell me exactly what's going to happen because you don't know. I'm like, dude, honestly, I think you like really misunderstand the entirety of trading, because no one knows. But if you're a great trader, your risk reward is 60, 70, 80%. Sorry, your win rate is at 60, 70, 80%, and your risk rewards are consistently 2 to 1, 3 to 1. Like, you're gonna make shit ton of money. You're gonna print in this market. Why? Because you are embracing an ability to be right and wrong at any given time. You understand that this is the game of probabilities, and you are not putting everything in one trade trying to make it back. You know, that's exactly how people are losing it all, thinking that there is the best trader in the world that's gonna have this exactly the best possible trade, and that's how you are actually losing most of your capital. And please, once important that I always emphasize, if you lose 50% of your capital in your early day trading journey, that it takes 100% to get back the way you were, right? If you lose 10%, it takes more than 10% to get the way you were. So with the drawdown increasing, the amount of what you need to do is increasing as well. So if you lose 90%, putting your money in one alt and letting it bleed throughout the bear market, keep in mind it takes you 700% to just get back to where you were. What is the probability of getting 700%? And that's why I prefer to also be a little bit more vigilant in these current conditions. And because, as Nick has been mentioning last week, as I've been mentioning, there are more alts, more and more projects coming in, and the total market cap, total 1, total 2, total 3, they're not accelerating with the same pace as any of those projects and the number of projects that come into the market, right? So of course it's harder for the older projects, like even great projects with great use cases, like the DeFi projects on Ethereum, including projects like Curve that actually have really great TVL, great use cases. The institutions gonna love them due to the security and sustainability. Because guys, institutions, they don't care so much if it's cheaper or not. They're fine to pay the transactions cost in Ethereum. All they care for is the security out of this crypto trilemma, right? They don't need to do it faster, they don't need to do it cheaper. They just need to make sure that dozens of billions of dollars they're gonna move are properly reflected on the blockchain, right? Solana cannot currently provide that. So I'm saying that we are bullish on Ethereum. We are bullish on Ethereum betas. We are having the Ethereum ETF accepted. Yet those projects are struggling because they're more and more and more the supply of the projects and overall. So keep this in mind. And this is my piece of wisdom to encourage everyone, to also take things a little bit into your hands. Learn how to trade, learn how to cut the losers, right? Don't be like Katie Wood. She's constantly DCAing to her entries, and we're gonna see this in a second. So her strategy, I'm gonna buy more of what's already 50% down. Like, how sustainable is that? Like, how much of liquidity you have versus her? She has an infinite amount of liquidity through, receiving the money through the ETF, because her strategy is avoiding this 220, avoiding charging people 2% for the volume and giving them the access with this few basis points ETF. So the amount of people who bring the money there is uncomparable to your personal money. This is not something that you can do unless you are like on a infinite net worth, or unless you manage the family office with few $100 million that you can consistently DCA as there is no tomorrow. So let's sum up here. Be mindful where your entries are, and don't take it personal when I'm telling you I'm buying things lower. And with all that said, today is Friday, so a lot of volatility that's going to come from the TradFi market because of the option expiry, because of the overall low liquidity. Always keep in mind that all the leverage trade you would like to do should come more into Tuesday, Wednesday, Thursday, because all the markets across the entire globe are overlapping. Asia, London, the US. Either Monday or Friday, you have one of those, at least one of those being closed. So it's easier for the market maker to move the prices, especially when we are speaking about altcoins, especially when we are speaking about the altcoins outside of top 50. Like, it's super easy. It costs several $100,000 to create this week to liquidate everyone. So please be careful and leverage on Mondays and Fridays. So once again, I'm not saying that we're gonna have much lower prices. I'm just saying that we're gonna have the lower prices, and I'd like to recommend you to probably beat, at least that's what I want to do, you do you, something between 64 to 65,000, expecting, as I said, us losing the range, everyone shorting, Friday, low volatility, a lot of economical data coming in. And when it comes to alts, for example, that's why I was always emphasizing all these crypto Twitter people that are telling you to long the breakout, bring in these diagonal lines. You see, every time, where is this breakout? So amazing, wrecked. Let's change the line now. They're changing the line all the time as well, right? Because those lines are extremely subjective. And here you're getting wrecked again. Now you're gonna move it where? Now you're gonna move it here, here, here. What are you gonna do? Like, where are you gonna see those breakouts? How many times you need to get wrecked, to understand that it doesn't work? It works sometimes. Everything works sometimes. But honestly, the right approach here is you build a range, you build a horizontal range, and you don't long the higher value area of this range. You wait for this range to get accepted. You wait for maybe 2, 3, depending on your risk reward, your risk preference, your risk tolerance, 4-hour candle closures, and only then you would say, okay, market participants want to transact into the previous range, and that's where you're getting long. You're not getting long because some meme line is being extended, right? So I want to emphasize this additionally, because I saw in the comments people are telling I'm actually a breakout trader, and so far it worked. Yeah, it works until it doesn't. And especially if you're trading on the intraday, like if you're trading on the 15 minutes time frame, 5 minutes, 1 hour, then there is absolutely not a way to go. Once again, I think maybe it's a little bit of enough for crypto, because I realize there's a lot of value in the charts, and we always are rushing a little bit, so we don't have time to cover. You remember, guys, I was bringing you the stock of Warner Brothers and Discovery. I emphasized why I love it, because I think, in my opinion, it's a great value. We were speaking about $5 billion in the free cash flow and price to earning ratios of 4. So nothing changed since then. I think that we're starting right now to print an amazing engulfing candle. So I would recommend you, for those who are not yet in this position, I think that can be actually looking like a bottom formation with this breakout, and now us beating this, or like market us as well beating this order block. So yeah, I would place my entries everywhere between 7.8 and the current price of well, market is already gapping up on pre-open at 8.10, and your stop loss is just us losing this order block, based of course on your preference, on your risk profile. Me personally, I would give it a little bit more room for the previous low, but if you are feeling like being kicked out and re-entering, that's absolutely not a problem. Like, this is a psychological thing. You're only playing against your ego. It's very fine to get kicked out. Why? Because if you get back into the chart, I think that at least this high of like 12.6, it's something that we can target. So in my opinion, that's like an amazing risk reward. We're talking here about whatever your stop loss is, but something between 8 to 1 to 10 to 1 trade. I think that's an amazing opportunity. Please don't expect, this is not an altcoin. The company is not going to do like that. So it might chop, it might consolidate under this resistance, it might start accepting back, but keep your eyes on it. Another company that I really like here, and I entered personally, large position. I think China received a lot of negativity. I understand that this is like a tricky market, and of course Chinese economy is absolutely not doing well, but we're talking here about most prominent, like top 5 Chinese companies. The government, in my opinion, the Chinese government and the CCP would not let it just go bankrupt. There were like those, fears with Baba, but as soon as SoftBank, the Japanese investor, get out of the company and the price actually started to improve, like I think Baba here, retesting this upper value area is an amazing buy. I actually doubled my position since we came back to those levels. Also, to be honest, I took a little bit of profits here because, like you see, the Bollinger Band is getting overextended and you took out those highs. So you don't also need to wait for me to, say like, okay, I made like a nice money over the week. Like just out of this breakout, we're talking about 16% within like 10 days. Fine. I mean, what prevents you from taking profit? Take a little bit. Don't take the entire position. Act like Jesse Livermore. You take half out of here, and then you re-add a little bit back, but you keep your part of the position running. So anyway, Baba is a great add here. I think Baidu is a great add here, because we are in the range low, and yeah, we can also like DCA a little bit from current level of like $98 all the way to 94. So that would be the zone where you could add. Why I really like those Chinese companies, because they're trading with in extremely low forward price to earning ratios. Like Baidu is at 8, Alibaba is at 8 as well. I mean, Li, for example, it's at 9, but also looking just purely from the chart perspective, I'm not gonna have like right time right now to go into the balance sheet and to do the Warren Buffett's job. But when you compare those two charts, when you compare Li Automobiles with, for example, Baidu, what do you see here? As this chart looks more like it's actually having this bottoming formation, because we already starting like to get into this range, horizontal range, and Li is still clearly in this downtrend. So of course, there are people that are like trying to catch every bottom possible, but what's the probability of that this bottom being a bottom? Like, I am not curious, to have a position here yet. I want maybe this gap to be covered. I want to see a market structure break. I want so creating higher high here. I want to beat somewhere around that zone where this market structure break would happen, and I would have the zone of demand. So that's what I would be looking at, just purely from the trading perspective when I'm gonna look at the chart. So yes, for me, despite Li might look like better, technical trade, I'm gonna catch the bottom, but no, please, we're like trading large companies. That is not like an altcoin you want to catch on leverage. So give yourself a little bit of time for seeing those things bottoming. I never mentioned natural gas because that has been the times I was not yet on the channel, but that's actually one of my favorite trades down there. Also, why? Because this is commodity, right? We're not talking about some company that can go bankrupt. That's why the reason I like commodities so much, because they have like pretty much universal values across geographies, across the countries, across various sectors that's going to use them. So when I see a certain commodity like natural gas being like 85% down, of course we were in inflation territory. We were in inflation territory on lumber and on many other assets. But when I'm going back on a daily and I see the same type, the same bottoming formation as I just guys have showed you on multiple Chinese companies, finally 3 retests of this range high, and then we have this little swipe of this previous low, and then we start accepting above the range. So you don't have to be a hero. You don't have to get along from here. It's okay to miss the first 20% of the move. But if you see how we start accepting above the range, then you can catch the 46% move. Not that just it is much higher, it is also having a way higher probability to take place, right? So that's what I encourage you to do. Always think from the perspective of probability, not just purely from perspective of how much the thing can go up. Yes, everything can go up 10,000%, but what's the probability of that? If it's less than 0.01%, like why would you be in that trade, you know? And that's why I always want to emphasize that to the altcoin traders. Just please don't try to get at the cheapest price possible. Try to get with the highest potential for that move to take place. So lose the first 5%, let the order block do the job, resolve, because you also want to don't want to get chopped out. You also don't want to spend so much time where your capital can actually work somewhere. Have a look on this chart, like from the moment of breakout, how many days, like we are here on a daily, how many days it took for natural gas to actually reach 45% gain. 17 days, 18 days. This is incredible. Like, do you really want to spend all that time here? And, you know, like, do you really need to spend whatever number of days are? Do you really want to spend an extra 60 days waiting for this range to resolve? It can be resolved in 180 days. And, you know, the problem is here, I saw so many people getting long every time here and here and here and here and here. And what market done to all of them? It took all this liquidity and kicked out all of them of the positions. All these impatient people who tried to get long on natural gas for like 242 days. Please keep this in mind too. There's no need to rush in any of those trades. You will be way better off actually letting those 240 days resolve and not getting into this chop, and then taking advantage, putting your capital for those 18 days when it actually does the job. This is super important, and you can apply it to any market: commodity market, forex market, crypto markets, equity market, pretty much everything. So this is, in my opinion, an important thing to keep in mind. So as you see, guys, the market provides never-ending trading opportunities. They emerge here and there, and you can always compound, and that's what I really love to do. Either I move from the tech into value, or I move from value to China, or I move from China to natural gas. There are always opportunities in the market, but you need to also be mindful in taking the profits and making your capital work somewhere else. And the most annoying thing, of course, here is if you do a lot of those trades, then you have to pay taxes. So the sponsors of today's video is iTrust Capital, which allows you to transfer your existing IRA, Roth IRA, or start a new one from scratch, and take a tax advantage of buying and selling stocks, crypto, gold and silver, and like a bunch of other commodities which can be traded on 24/7 basis. So you actually can travel and still, you know, stay in Australia or Bali or somewhere in the Southeast Asia and still take advantage, good advantage of trading those, as many friends of mine are doing. The only thing is that there is no monthly fee, there is no low cost, and the Data Dash viewers are actually getting an onboarding bonus for those. So I really recommend you checking out. It's the provider that we work with for a number of years. They have $9 billion in transaction, hundreds of thousands of accounts. So in my opinion, it's worthwhile checking, especially if you want to optimize your tax results, because yes, sure, you can do 80-90% a year trading on your portfolio sustainably. I'm talking about like trading purely equities, for example. But of course, you know, if you have to cut out every time 20-30% based on jurisdiction, of course, into your short-term capital gain tax, that's annoying. And over the year, the 30% are compounding into, you know, like excess of your initial account. That's what constantly Warren Buffett emphasizes, and that's what Albert Einstein called the eighth miracle of the world, is the compounding. So let the compounding be to your benefit, not to IRS benefit, especially since it's 100% legal and there is already a program for that. Well, with all that said, guys, I would love to cover more, but I also try to keep the videos a little bit concise so they are not overwhelming for a lot of people. With all that said, I wish you an amazing end of the week. Please keep in mind that Friday and Monday are very volatile. Don't overtrade. Keep in mind that some of your position might be better off in value, so you can sleep better and you don't have to check your trades on the daily basis. You can actually DCA lower, unlike a lot of the risk plays. I normally don't recommend DCA lower. I normally recommend to cut the losers early, but as some of our members know in the Telegram group, sometimes I say no stop loss, and we will cut manually if there is a need, but we don't want the stop loss to be triggered, because it's an amazing value play and I want you to be there. This we've done, we entered also in Palantir, just for you to let you know. We gonna increase our position in PayPal and so on. So with all that said, I wish you an amazing end of the week. Stay tuned and we'll cover way more stocks and crypto next week. Ciao.